In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analyst's predictions are, create a valuation, and review then rate the company. Today we are going to look at Warrior Met Coal, ticker HCC. Let's dive into the process I follow when reviewing whether or not to invest in a company. I analyze financial information against the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the most critical metrics when evaluating a business. Ideally, we want to see each metric achieve or exceed a specific benchmark. A company can earn 1 point for meeting the target, or half a point if it falls just short but within 2% of the target. Stick around until the end. I'll reveal exactly what I plan to do with this stock and why it could matter for you. First, what does Warrior Met Coal actually do? Warrior Met Coal is a leading producer of metallurgical coal, or met coal, which is used exclusively in steel production, not power generation. The company exports over 90% of its coal to markets across Europe, South America, Asia, and Africa, giving it a significant share of the US met coal export market. Warrior is known for producing high-quality, low-sulfur coal, which is critical for premium steelmaking. Looking ahead, Warrior's long-term growth potential is underpinned by the Blue Creek project, a massive new underground mine expected to begin production in 2026. It's forecasted to increase production capacity by over 50% and significantly lower cost per ton, a key step toward long-term profitability and competitiveness in a cyclical industry. Now, let's break down the 12 key pillars. The first pillar is earnings per share growth. This is where we take the net income and divide it by the number of shares outstanding. EPS growth tells us if the company is becoming more profitable on a per-share basis. For Warrior Met Coal, EPS growth over the past 12 months is minus 57%, well below the 10% target, scoring 0 points. Next, we look at free cash flow growth, which measures the cash a business generates after all capital expenditures. Warren Buffett considers this one of the most important indicators of a company's financial strength. Warrior's FCF growth is minus 73%, scoring 0 points. However, this decline is primarily due to capital investment in the Blue Creek project, not operational weakness. The third pillar is revenue growth, which indicates the company's ability to grow sales before expenses. Warrior's revenue declined 16% over the past year, scoring 0 points. Now we assess book value growth, calculated by subtracting total liabilities from total assets to find shareholder equity. Phil Town stresses this metric as it reflects how well management is growing intrinsic value. Warrior's book value has decreased minus 4%, scoring 0 points. Next, we turn to return on invested capital and return on equity. These metrics are used to evaluate how efficiently management is allocating capital and delivering returns for shareholders. For Warrior Met Coal, both return on invested capital and return on equity are at 5%, below the 10% benchmark, scoring 0 points each. Now we move on to debt. Joel Greenblatt prefers companies that can pay off all their debt with free cash flow within 3 years. Warrior actually has net cash, meaning it has more cash than debt. This is a strong signal of balance sheet health and earns Warrior 1 point. With the information we have gathered, it tells us that aspects of the key pillars are under pressure, but let's look further into the company to see if there are any redeeming factors. Now let's look at the remaining key pillars which help define an excellent business. Let's look at the gross margin, which shows how much money a company retains after production costs. Strong margins are a good sign of pricing power and operational efficiency. Warrior's gross margin is 23%, below our 40% benchmark, scoring 0 points. Next is the operating profit margin, which tells us how much profit is left after operating expenses but before taxes and interest. Peter Lynch looked for companies with strong operating margins as a measure of business strength. Warrior's margin is 7%, scoring 0 points. Free cash flow yield compares a company's FCF to its market value. Terry Smith prefers a yield of 5% or higher. Warrior's FCF yield is minus 6.29%, again due to project investment, scoring 0 points. Next, we evaluate 10-year book value growth, giving us a long-term view of shareholder equity expansion. For Warrior, this is 12%, exceeding the target and scoring 1 point. Lastly, 5-year net income growth measures the company's long-term profitability trend. Bill Miller sees earnings growth as the biggest driver of stock price appreciation. Warrior's net income has declined minus 55% over 5 years, scoring 0 points. In the description, I've included a link to the investors page and the annual report if you want to check it out for yourself. Although Warrior Met Coal appears to be under pressure in several areas, it's important to recognize the cyclical nature of the business. Current results reflect the capital-heavy phase of a long-term investment cycle. The Blue Creek project, expected to begin production in 2026, will increase Warrior's met coal output, lower unit costs, and enhance its global competitiveness. As of today, the stock is trading at $47.39. Over the past 6 months, it has moved relatively sideways, with some volatility as the market weighs short-term challenges against long-term growth potential. Its 52-week range spans from $38 to $75.53, highlighting the commodity-linked price action. Here's a quick overview of Warrior's financial metrics, along with what each one tells us. Market cap, $2.49 billion. This represents the total market value of the company's outstanding shares. It gives us a sense of the company's overall size and how the market values it. Revenue is $1.32 billion. This is the total amount of money the company brought in over the trailing 12 months. It shows the top-line performance before expenses are deducted. Net income is $105.45 million. This is the profit the company earned after all expenses, taxes, and interest. It reflects how much actual income is attributable to shareholders. There are 52.56 million shares outstanding. This is the number of shares currently held by all shareholders. It's used to calculate key metrics like earnings per share. The EPS is $2.01. Earnings per share tells us how much profit is generated for each share outstanding. It's calculated by dividing net income by the number of shares. The PE ratio is 23.53. The price-to-earnings ratio tells us how much investors are willing to pay for $1 of earnings. A higher number can indicate growth expectations, while a lower one may signal value or risk. Their dividend is 32 cents. This is the cash return the company provides to shareholders. The yield shows how much return you'd receive as a percentage of the share price. The 52-week range is $38 to $75.53. This shows the lowest and highest price the stock has traded at over the past year, giving a sense of volatility and price movement. The analyst consensus is a strong buy. Based on analyst ratings, this indicates that most professionals covering the stock see it as a good investment at current levels. The 12-month price target is about $75. This is the average price analysts believe the stock will reach over the next year, suggesting a potential upside of nearly 59% from current levels. Let's calculate a valuation. Using Warrior Met Coal's current EPS of $2.01 and an estimated EPS growth rate of 12%, assigning a forward PE ratio of 25, and projecting 10 years forward with a 10% return rate, we estimate a future stock price of about $156. Therefore, giving you an intrinsic value of $60.17. And with a 25% margin of safety, a price of $45.13. Since the current price close to the margin of safety, this scores a check. It all depends on your personal view and outlook for the company, as well as the return on investment you would like to see. When reviewing the key pillars, Warrior Met Coal scored 2 out of 12, earning a cross. Over the last 6 months, the stock has moved sideways with long-term support from its strong balance sheet and growth plans, scoring a check. Analysts are forecasting EPS growth of 47%, scoring a check. The current price is below the margin of safety, scoring a check. According to Morningstar, Warrior Met Coal does not currently have a moat, scoring a cross. Thanks for sticking with me. Now let me share my personal thoughts and opinions on this company. My final overall rating is 3 out of 5 stars. Warrior Met Coal is a cyclical commodity play with short-term earnings weakness, but long-term potential through its strategic investment in Blue Creek. For investors comfortable with market cycles and looking for undervalued companies in global infrastructure and steel supply chains, this could be a compelling long-term value opportunity. While Warrior Met Coal faces short-term challenges due to market conditions and price declines, its operational efficiencies, strategic projects like Blue Creek, strong financial position, and positive analyst forecasts suggest a promising outlook. These factors indicate that the current lows are temporary and that the company's performance is likely to improve over time. This is why I have opened a small position in the stock, and intend to buy more if it goes below my margin of safety price. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.